following is an update and technical analysis on Tesla, a company of the consumer cyclical sector in auto manufacturers based upon the weekly time interval, where I had deep dived just in my previous video on General Motors, Ford, Stellantis, and the huge unprecedented UAW auto worker strike that is really going to wreak havoc across all three companies if and when it ends up getting dark and deep of a strike. Whereas Tesla stands as on its own lone island as the sole profitable electric vehicle company, and if their profit margins decline, it signifies even greater losses for others in this industry, making it an unsustainable path for competitors, where we're anticipating further reductions and or discounts in prices as Elon attempts to force rivals out of the market altogether and completely and entirely. And just taking us out to a quick history lesson, in the year 1908, there was a staggering 253 active automobile manufacturers, followed by 1929 during the Great Depression's collapse. Only 44 of those companies remained, whereas Ford, General Motors, Chrysler, in the entire Maxwell saga, dominated around 80% of the industry's production. And truly, time has the power to reshape everything. And here we are, where we rely within the technical dimensions of this stock is the weekly interval primary reactionary high downtrend line on a remarkable journey, coinciding with the 2021 November all-time highs. And I believe that is the most major key inflection point of Tesla. And we are now honing in on and potentially going to backtest and or retest this key inflection point in what I like to call the neckline to the potential inverse head and shoulder top. Whereas we additionally have a primary reactionary uptrend line off the October 2022 reactionary lows, very signified reaction. And that is a major additional key inflection point with the 50 weekly exponential moving average hovering in closely to that primary uptrend line. Whereas you have the percent oscillators honing in on recovering their zero line thresholds and how this being poured back into the stock here in a steady rhythmic cadence of price action that more than likely, in my opinion, looks more so on the bullish side. Resistance is resistance until taken out. We have the 337 price resistance up above, correlating with the primary reactionary downtrend line, major key inflection point called a dual line of price support, and then additionally the 385.11 price resistance up above. And again, these are just key targets to watch in on. Noteworthy, this is not an objective. This is not an objective long trade entry until you have that solid weekly candle close above. That's what bull traders, long traders, they want to see a complete puncturing of this dual resistance, which is another 10-15% from here on a solid weekly candle close print right up above that key inflection point. And what is more significant is the inverse head and shoulder, well-defined, classic looking bottom, and that signifies the neckline off that primary reactionary downtrend line. The neckline of this inverse head and shoulder will be a dominant force if and when recovered and completely breached to the upside, whereas you, again, have very well-defined health being poured back into these momentum indicators on a complete gap up in the interval, in the daily, within the daily interval. Looks very healthy. You have monthly time interval, stochastics 1033, hovering up above high ranges in a healthy uptrend. You have the oscillator histogram just printing nothing but green candle closes above their zero line threshold. Very swinging momentum to the upside, crossing over there on the zero line threshold as well in the price percent oscillator. And again, the weekly is one of the more well-defined looking patterns that I've seen in quite some time. Aggressive short trade setup, in my opinion, off the back end and or retest of this key inflection point with an unchecked gap down below, which would be good for a 12.7% drop, and a repeat and or revisit of this primary uptrend line for an 11.8% drop on a complete backfill to the gap. And then ultimately, of course, short sellers, bear traders would want to see a solid weekly candle close breakdown below that primary uptrend line. Take it as you will. If I do decide to play it, I would only play with a half and or quarter position size, just due to the mere fact it feels nothing but bullish. And if the UAW auto strike really starts to get really deep and dark, I would only suspect Tesla could be a potential catalyst for a much larger move to the upside. Or do not underestimate how quickly a rush back into equities can play out in the near term and or long term, especially if the big three auto companies were to shut down and or go on strike for a very long, prolonged period at a time, spiraling into a potential all-out chaos event.